Good morning, I'm Chris Swift. Welcome to Market Day Report. It's a pleasure to be with you this morning, and we have had some real activity now from the WASDE report. We've got all of those numbers out. Let's take a look and see what it has done to the market this morning. I've got the corn market still down on the day, 6 3/4 on the July at 603.5, but it is back above that $6 handle again for old crop. December corn 530, down 3. That's gained back several cents off of the low this morning so far. In the soybean trade that has appreciated the most from it, still higher this morning. July up 19 1/4, 1382.5. September up 14 at 1216 1/4, and Novi beans right at that $12 mark, 11.99 3/4. In the Chicago wheat. Chicago wheat this morning still a little bit lower, but seemingly has come back quite a bit off of the lows. July down a penny, 625 1/4, 618.5 the low, so a good 7 cents off the low there. December down 3, 653 1/4 with 647 1/4 the low tick. Kansas City hard red winter wheat down 13 1/4, 791.5, 785 1/4 the low. December wheat 13.5 at down 13.5, 789 even. And we'll wrap it up with the spring wheat this morning, down 8 3/4 on the July at 807 even. December down 9 3/4 at 813.5. I would like to invite my guest, Bubba Horowitz, on this morning with Bubba Trading. Bubba, certainly glad to have you on the show this morning. We've got the WASDE report out of our way now, and now we're looking forward to the weather. Tell us what to do.
Go on vacation.
Where are we going?
I don't know, Chris, but good morning. Look, the markets are still dead. Nothing has changed. WASDE came out, and there was virtually not only not much price movement, but certainly there was no volume, which has really been the lacking source here in the grain markets. We haven't seen much trade as the equities continue to try to take higher. We're not seeing a lot of new money flow in, and you're continuing to see the funds try to pressure these grain markets, and eventually they're going to get trapped. But if we're going to step out and keep buying wheat from Poland and other places in our own, then our prices are going to stay depressed, which makes absolutely no sense whatsoever.
And I heard some news about the soybean. It kind of puzzled me a little bit about shipping beans out of the U.S., crushing them, and then bring the oil back in. Of course, I realize they don't want the meal here, and we've seen meal been pretty weak on here. Anything else maybe in the corn market? I've mentioned before that we're fixing to go back into a full carry charge once with July expires there. Do you see anything there that our farmers could use with that carry and the higher prices out into the March-May timeframe of next year?
Well, I just think that when we look at it, we see that corn is really probably the strongest of the bunch right now, although lower today. It really seems to have found a bottom and looks to be starting to press forward, and I think should start to move higher. But again, I've been bullish pretty much all along, looking for a much bigger market, and unfortunately, we have not seen that yet. We continue to see pressure put on these, and right now, the real lack of activity. And I think the unfortunate deflationary scenario we might be looking at could be causing a lot of heartburn no matter what goes on.
Sure. So I asked you a little bit earlier about the oil market, and you said it wasn't doing much any there. And now we know that grains are at least a percentage of the energy markets there. Do we see much aspect with the energy markets? We know that we're trading higher in gasoline over the last couple of weeks and kind of meandering in the crude oil, but not as much in diesel fuel. Where's this bean oil, the biodiesel demand come in if we're not seeing real big demand for our energy products?
Well, then that ties right to the deflationary scenario, right? We're not having the demand. You would think with Saudi Arabia cutting the cost of oil or the production, you would think that oil would be charging higher, and it's not. In fact, yesterday we saw it break below 69. So, I think oil should be over 100, but you have between jobs and everything else in this country, you have a lack of real demand, which again is keeping the pressure across the board and everything because, of course, they are tied directly to energy.
Sure, absolutely. Bubba, we're going to go away and take a commercial break. We'll be right back with you and talk a little livestock. I'm Chris Swift, and this is Market Day Report. Be with us back. And welcome back to Market Day Report. I'm Chris Swift. We've had a really volatile day in the cattle markets. Even in the week this week, we've seen a lot of price action there to them. Let's take a look at the board right now and see where we're trading. And a little bit softer now in the June contract, 178.70, down 7. In the August, we're down 97 at 171.27. December fat's down 40 at 177.12. Take a look at the feeder market. The feeder market had been higher this morning, is now down pretty sharply, down 177 on the August at 236.87. That's moving towards the feeder cattle index, currently at 222.20. September contracts down $1.80 at 239.67, and October feeders down 195 at 241.50. And the hog market this morning has been a little bit volatile as well, but kind of still that way with the June going to expire next week. It's down 10, 87.57. July hogs up $1.50, 88.70, and August hogs up 77 at 83.20. I'd like to invite Bubba back with us and talk a little bit of livestock. Now that we've got the Memorial Day out of the way, we've got Father's Day coming up, and then the 4th of July. We've got record high meat prices out there, both retail, wholesale, high cattle prices. What's the consumer here going to look at when he goes to the grocery store this week?
And I thought inflation was transitory. We have a shortage in cattle, which obviously helps keep that price higher. It's not good for farmers. It's not good for anybody, right? There's shortage. They're not making enough money, no matter what they're selling them for. And of course, the hog market looks like it has finally found some footing. But again, I think we have to look back into: is the consumer going to have enough money to buy these things, and at what volumes, and how much entertaining, how much barbecuing are they going to do this summer to absorb what we have? And that's a real problem, because you can see we talked about oil, the lesser demand in oil means less people are getting together, and less parties and less barbecuing. Yeah, it sure seems that way. And I know we've been record high. So, Bubba, I certainly do appreciate you coming on this morning. That's Thanks, Bubba Horowitz with Bubba Trading out of Las Vegas, Nevada.